Hello everyone. Today we are going to know about Direct Tax Vivad Se Vishwas Act 2020, also known as Direct Tax Vivad Se Vishwas Scheme. It is an income tax dispute resolution scheme. On 1st Feb 2020, that is on Budget Speech 2020, the Honorable Finance Minister Nirmala Sitharaman has announced the Direct Tax Vivad Se Vishwas Scheme. The objective of this scheme is to reduce the pending income tax litigations at various appellate forums and timely collection of the revenue. The main objective of this scheme is to reduce the time which is invested in the income tax litigations, thereby saving the time to department and the assessee also, and that time may be used for their business purpose. Who is eligible under this scheme? The appeals by assessee or department pending as on 31st Jan 2020 before various appellate forums like Supreme Court, High Court, ITAT, that is Income Tax Appellate Tribunal, Commissioner of Income Tax Appeals. Apart from the appeals, some other proceedings also covered under the scheme. Those are writ petitions, revision applications under Section 264 of Income Tax Act, dispute resolution panel related proceedings, matters which are set aside to the assessing officer by higher appellate authorities, and also arbitration, mediation or conciliation. Also covered deemed appeals under this scheme which are pending as on 31st Jan 2020. That is, where there is a order from the appellate authority and the time limit to go to appeal with higher authorities is still not yet expired. Also, some of the cases are excluded from this scheme. Those are sets related pending appeals under Section 132 or 132A of the Act. If the disputed tax exceeds Rs 5 crores, that is, such cases under Section 132 or 132A of the Income Tax Act up to 5 crores are allowed under this scheme. Further, writ petition against notice under Section 148 of the Income Tax Act and no assessment order is passed. Order passed by the authority for advance ruling and no income determined. Any undisclosed income from a source located outside India or undisclosed asset located outside India. Assessment or reassessment made on the basis of information received under an agreement referred to in Section 90 or 90A of the Income Tax Act if it relates to tax arrears. Also, waiver application filed under 234A BC, that is advance tax interest related waiver applications. And in case of a person against to whom the prosecution is already instituted, then these writ petitions are not allowed under the scheme. All are one of the appeals. That is, if there is more than one appeal pending for the same assessment year, then assessee may settle all the appeals or one of the appeals, as the scheme is co-appeal. Co-appeal means in the capacity of appeal. The scheme is in the capacity of appeal. The assessee and department both have filed appeals. That is, in the case of cross appeals, assessee may settle both the appeals or any one of them. Now the question is, what is disputed tax? In the case of pending appeal or writ petition or special leave petition, as on 31st Jan 2020, disputed tax means amount of tax payable if such appeal or writ petition or SLP was to be decided against the assessee. In the case of deemed appeals as on 31st Jan 2020, Disputed tax is tax payable as per the order giving effect to the appellate authority's order. In the case of assessing officer passed an order on or before 31st March 2020 and time limit for filing an appeal against such order has not expired as on that date, then disputed tax is the tax payable determined in accordance with such order of assessing officer. Another situation where the objections filed by the assessee are pending before dispute resolution panel, then tax payable as if the dispute resolution panel was to confirm the variation proposed in the draft order. In the case where dispute resolution panel has issued any direction under section 144C, but assessing officer has not passed the order, then disputed tax is amount of tax payable as per assessment order to be passed under section 144C subsection 13 of the Act. In the case where application for revision under section 264 of Income Tax Act is pending as on 31st Jan 2020, in those case disputed tax is the tax payable as if the revision application is not to be accepted. Where an appeal is pending before Commissioner Appeals as on 31st Jan 2020 and notice proposing enhancement of income is already issued by Commissioner Appeals, then amount of tax payable shall be increased by the amount of tax on disputed income for which the enhancement notice has been issued on or before 31st Jan 2020. Another case where dispute in relation to an assessment year which results into reduction of tax credit, that is MAT, or reduction in loss or reduction in depreciation, then appellant has the option either to include amount of tax related to such tax credit or loss or depreciation in the amount of disputed tax, or to carry forward the reduced tax credit or loss or depreciation in such manner as may be prescribed. Now the important part of the scheme is amount payable under the scheme. In the case of quantum appeals, that is basic appeals, writ petition, special leave petition, dispute resolution panel objections, revision and specified proceedings. Here if the scheme is availed, that is amount is paid on or before 31st December 2020 means 100% of dispute tax should be paid. If after 31st December 2020 the scheme is availed means disputed tax plus 10% of disputed tax to be paid. In the case of search appeals, on or before 31st December 2020, 125% of disputed tax to be paid. After the specified date, 135% of dispute tax to be paid. In the case of dispute related to only penalty or interest or fees, then 25% of interest or penalty or fees as the case may be to be paid on or before 31st December. After 31st December, 30% of the interest or penalty or fee to be paid. Here the point to be noted is if the amount payable in excess of dispute tax exceeds amount of interest or penalty, then such excess should be ignored. In the following cases, amount of tax payable is 50% of amount payable as per the table which is showing here. Those cases are in the case the appeal is filed by department, or in the case where an appeal is filed before commissioner, or objections are filed before dispute resolution panel by the appellant, and the appellant has already got a decision in his favor from ITAT or from High Court, and it is not revised by the higher appellate authorities. Another case where an appeal on any issue before income tax appellate tribunal, on which appellate has already got a decision in his favor from the High Court, which is not revised by Supreme Court. That is in the case of department appeals, or appeals in which the appellant has already got the decision in his favor from an appellate authority. Then amount of tax payable under this scheme is 50% of the tax payable normally. Thank you for watching. Please subscribe to our channel if you like the video, and please comment your opinion on this video and share it to your friends and relatives. Thank you for watching.